Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
Today is going to be amazing because this is something that, I've done a lot of flips and buy and BRRRRs and all this stuff, but I have to say that I've not been very good at creative financing deals, although I understand them, I get it. I want to really dive deep in with our guests today. We've got Gabe coming from, you're in Eugene, Oregon. And
Eugene,
Gabe,
Oregon, yeah.
Yes. And he's got a great story, a great background, and he was gracious enough to join us today so we could share with our investor club and ties with us today. And let's just kind of dive in. Gabe, if you want to give just a high level kind of background of yourself, and then we'll dive in with questions after that. Yeah,
absolutely. Yeah. So in about, around 2002, I read the book Rich Dad, Poor Dad, and that got me fired up to want to invest in real estate and become financially free. Prior to that, a couple years before that, I had graduated high school. I joined the Army National Guard in 99 and graduated high school in 2000. And so in 2002, when I read that book, I was like, yes, this is what I'm going to do. I had no college education. I had no plan. I just knew this is what I wanted. I was not interested in working for someone else. I wasn't interested in going to college. But shortly after reading that book, I got deployed to Iraq. So I spent a year in Kuwait and Iraq in 2003, 2004. And I told all my friends over there, I'm coming back and I'm going to build this real estate empire. And they're like, Gabe, you're an idiot. What are you talking about? How are you going to do that? And I kind of said, I have no idea, but I'm going to do it. The desire was strong. And so when I came back in 2004, got out in the military in 2005 completely, and I bought my first house that year. But back in 2005, banks were giving money to anybody. So I had no job, no income. This was during the subprime, and they gave me a house with no money down. And I thought, this is amazing. This is easy. I rented out 2 of those rooms. Now they refer to that as house hacking. I just thought it was smart business back then. Rent out 2 of the rooms and live for less than I could anywhere else. 06 did the same thing. The bank gave me a no money down deal. 07, I did a 5% down deal. I thought, this is easy. This is easier than the books. This is just too easy. So now it rolls around 2008, and I go back to the bank, and they said, sorry, guidelines have changed. Like, we're not going to give you a loan. Things have changed a lot. You actually need a job. You need income. You need a large down payment. And I thought, man, what am I going to do? That same year, I'd shut down a nutrition store that I'd opened up a couple of years before because it wasn't making money. My first son was born that year. And I went and did a bunch of odd and end jobs and eventually landed a minimum wage job at one of the high schools. And about 3 months in, I was just kind of like, hey, screw this. This is not my dream. This is not what I was put here to do. And I got real serious about investing in real estate. That was kind of the turning point of, hey, do I want to keep buying real estate, or am I going to end up working the rest of my life doing something I hate? And that's how I gravitated towards seller financing, just out of necessity. I was able to start putting together no money and low money down deals and get really creative with the financing when the bank told me no. And that's really the start to my journey.
That's awesome. I love that. So can you kind of like, that was kind of in a downturn market, right? When you were starting.
Sure.
So there was more motivated sellers, but over the years, even when the market was hot, you're able to find these deals. What's been kind of like, are you doing direct marketing to these? Do you have a broker network? What's been kind of like the way you've been sourcing these leads? And then how do you kind of start the conversation with them, like on seller financing?
Yeah, it's a good question. So early on, it was a lot of Craigslist. I mean, I would spend every night, and people laugh about Craigslist all the time, but I still find good deals on there. I would just go on and search keywords like seller financing, owner terms. I mean, the bank just straight said, there's no way we're going to give you a loan. You don't have a job. You don't have money. You need 30% down, which was a lot of money back then. And so I just remember reading, something about seller finance. I didn't know a lot about it, but I started just searching every night and started having conversations with sellers that were interested. I've never done any kind of direct marketing as far as mass mailers or anything like that. I've never purchased any kind of lists. But I found that there were sellers that wanted to carry financing. So there was a lot of advantages to the seller to carry financing. So early on, after I did a few deals, I thought, oh my gosh, this is amazing. These terms work really well. But I also found that the sellers were really happy about it, because there's a lot of advantages to them as far as, if they get paid off in full, they're paying a huge capital gain right up front. They also, have to go put that money somewhere if they want to reinvest it. And all the sellers that have carried financing for me early on and even to recent, they've all been men and women in their 60s and 70s. They all already understand the advantage of seller financing. So I'm not educating or convincing them or having to talk them into what seller financing is. They want to be the bank. So they've typically owned the asset. They've owned the property for a lot of years, and they want to earn interest on that property, on that asset. And so after I'd done a few deals, I did think, man, I need to go out and educate these sellers and let them know, all these advantages. But when I reflected back, I realized these sellers wanted to do that. They understood that. And the conversation around, what the terms are was a lot easier to have than, what is seller financing. Not saying that you couldn't educate or talk a seller into carry financing. I just felt like my time and energy was better spent talking to sellers that already understood the advantage. Because then the conversation is, hey, what is it that you're looking for? What is it that you need? And if I could solve that problem and create a win-win scenario, then it's good for the seller. It's good for me as the buyer.
I love it. Yeah, that's great. So kind of deep diving in. So is it, do you have better success? So you started with single family homes?
Yeah, I started with, so those first couple properties that I bought with bank financing are the only properties. My first 3 properties are the only properties I've ever purchased with traditional financing. And I don't know if you can, that was subprime too. I don't know if you could even consider those loans, traditional financing. So with the seller finance, I started with small multifamily, 2 units, 3, 4, 6 units, 8 units, stuff like that. And you had asked about broker relationships and direct to seller. Most of those deals early on were directly with the seller. It was me getting the seller on the phone or meeting with the seller, because it became less transactional. I mean, real estate or any business for that matter is such a relationship business that if I could sit down face to face with a seller and just say, hey, what is it that you're looking to do? What's your objective? How can this be good for you and good for me? It becomes so much less transactional than putting it on a piece of paper, giving it to your agent, and then them giving it to their agent who probably knows very little about seller financing, if at all, and then presenting that to a seller. So I love working with sellers directly. But that being said, I've also done a lot with, listed properties as well. It's just a little trickier. It's making sure that, my agent knows, what it is I'm looking for. And even in those cases, if I can get in a conversation directly with the seller, I will. But it's all about building relationships. And so anything from just letting everybody know what I was looking for early on, and to, meeting every agent and broker that I could just to learn and build relationships. You never know where those relationships are going to go.
Yeah, that's great. That's great information. I love that you just went on Craigslist and just started calling, but it's really not that difficult. I think people overcomplicate things with their systems. That you just did a lot of, you'd reach out to people. And so when you're doing these searches, so I'm assuming like on like mobile home parks and properties that are a little bit hard to finance, it's easier to kind of convince them to seller finance. Is that kind of what you've been found on more of the unique properties?
Yeah, it's interesting. So as I was moving from some of the smaller multifamily to medium-sized multifamily, and then I did purchase the mobile home park using seller financing, I originally thought that there would be less sellers, but then I found the more sophisticated the investor, the more they had that interest, because they really understood the value, right? And so, at some point in my investing cycle, will I seller finance a deal to someone? Maybe, because there's lots of advantages. I mean, let's take a someone who's owned, say, a small multifamily for several years. Let's say for 30 years, they've paid it off. Let's say they've paid it off 30 years ago, or they've had it for 30 years. They no longer get the depreciation. They no longer have any interest they get to write off. And so they're looking at ways to maximize their income. And so if they seller finance the deal, again, they're not paying that huge capital gain up front. They're earning interest on an already paid off asset in most cases. It doesn't have to be paid off, but in a lot of cases it is. they're kicking back and earning that interest on an asset that they've already paid off. And then you're creating that new level of passivity by them not having to manage it, by them not having to be maintenance person and landlord and having to deal with turnovers and repairs. And so it really does create a great scenario for them as a seller. And then you get that upside. A lot of these properties are poorly managed, they're under rented, they have some deferred maintenance because a lot of that generation typically self-managed. And so really, really great people, like amazing people, but they're burnt out, they're tired, they've managed this property for years. And so, their adult children aren't interested in it. They've only heard mom and dad, for the most part, complain about the headaches of being a property manager and being a landlord. And so you're taking a problem away from them, and you get the upside potential of that property with the under rented and the deferred maintenance and some of the forced appreciation that you as the buyer can put into the property.
So like in today's market where it's a little bit, or was pre-COVID, it's still in some markets it's pretty hot. It's a seller's market still. When you're beginning your conversation with a seller and they show interest in seller financing and then they're expecting you to put a down payment down. I mean, what's the conversation? I mean, I think the pushback, I'm sure you get the pushback. Well, Gabe, you're not going to get this for 100% financing. I need 30% down. How are you? What do you relay to them to where they feel confident in saying, okay, this guy's, he's got a great track record. He's credible. Can you kind of dive into that?
Yeah, for sure. A lot of times I ask pretty casually, if I already know they're interested in seller financing, if they've already told me that they're interested or in a position to carry financing, I just ask them really basically, hey, what kind of terms would be attractive to you? And I just let them talk. I ask basic questions and then I just shut up and I listen. But what I found is most sellers are stuck on down payment, purchase price, or interest rate. It's rarely all three. It's rarely do they want, now every once in a while you get in a situation where a seller, they want a crazy amount down, above market price and some crazy interest rate. It's usually just one of those things. It's the down payment, the interest rate, or the purchase price. Early on, I didn't have money to put down. So early on, I had to find sellers that cared less about the down payment and more about the price or the interest rate. But what I've also found is the better the relationship, the better rapport that you build with a seller, the better the terms are going to be. A lot of times they want a down payment because they don't know who you are. So yes, it's collateralized. The seller financing deal, it's collateralized by that property. But a lot of times they want that down payment just as additional security because they don't know you. But if you give a large down payment in that year, they're paying capital gains on that amount down that year. So the better the relationship, the better the terms of the deal are. A lot of times I find that the reason they want that down payment, again, is because they don't know you. So as you build that relationship, the terms are only going to get better. Another thing with these sellers, every seller who's carried financing for me has had more than one property. And so when you build that relationship and everything goes smooth and you do what you say you're going to do and you honor your commitment, of course, they're going to call you the next time they sell the property.
I think that's a great nugget because that's what I've seen with some of my other investor friends is that they're finding the landlords that are getting ready to retire and they want an easy way to sell and not get their ass handed to them with taxes, yep. Right? So this is a perfect conversation to have. And I get so really it's about building relationships. Now, do you when you're structuring an offer, do you give them like, here's my cash offer, here's my seller financed offer, I'll pay, so they see it, or you just say I can only buy this if it's seller financed?
Yeah, a lot of time. I mean, if it's a listed property, I've done that where I've offered, here's the cash offer, here's a seller financing offer. But I've had more success if I'm dealing with the seller directly, literally just ask them the question, hey, what terms work for you? And then I take the information that they give me and base the terms off of that. If I can give a seller as much as if I can give them what they need, as much of what they need as possible and still make the deal work, I'm going to do that. And it just, every seller's, I get asked a lot, what's a typical seller financing deal? And there really isn't a typical deal because every seller's needs are different. Early on, I was doing these no money down and they would carry for a couple of years and I either had to extend it or refinance out. But then I had a couple in their mid 70s do a 30-year fully amortized loan. They wanted a fully amortized loan. And I thought to myself, gosh, why would they do that? And I'm not putting a date on their life. And I'm just doing the numbers going, they're probably not going to live to 110. I mean, I hope they do, but why? And so then I talked to them about that. And what I realized is they wanted to have income coming in for the rest of their life. And when they passed away one day, they wanted their family to continue to have that payment. And I quickly realized, gosh, every seller is in a different position, because I never would have thought early on someone in their mid 70s would want to carry financing for 30 years. And same with another older gentleman who had no family, no one to pass it on to. And he said, I just want a steady paycheck. I want a steady payment every month for the next 15 years. And then everything else was set up on his end to go to charity and whatnot after that, if he were to pass away during that time period. So a lot of it is just listening to what their needs are. And then can I structure it to give them everything that they possibly want? And in some cases, you gotta give and take a little bit, but can I give them what they want and make the deal work? And a lot of times you can.
That's great. Ty, you got any questions? Because I've been hogging.
I think that's spot on. That, a couple of things that I'm hearing and reading between the lines is that specifically to the sellers, that you can't make an assumption. A lot of us make an assumption and think, well, they want the most price, or they're not going to accept these terms, or we have kind of preconceived notions because we deal with different types of sellers, maybe in our wholesale or in our flipping business or in residential. And I think 2 or 3 things that Gabriel's saying is that with a more sophisticated seller or an owner, they're open to other terms. I also love the idea that you think about somebody where you said 30-year amortized, they want the income for the rest of their life. The last thing they want to do is get that, 20-year amortization and get that last payment and then go, oh my gosh, what are we going to do for, income after this and receiving that?
Exactly.
So, it's really, really spot on. And I never thought of that way. I also love that you take action, because even going back to the earlier comment or the, talking about Craigslist, the one thing I'm really picking up about you, Gabriel, is you, from day one, it was like just massive action. And I think in the end, people that win take massive action. I want to shift and just get a little bit more into the mindset of the seller financing. Typically, when you engage, and you talked a lot about relationship, which I really believe and love too. From the minute that what kind of marketing are you doing? Are you doing postcards, letters, or how?
I've never sent out any kind of mailers or list or anything like that. I always think at some point I'm going to have to get to that point to scale, but it hasn't been where I've needed to do that. So my best deals have been through just true, genuine relationships. And some of that is just being a loudmouth in a respectful way about what I'm doing. And I found out, early on, the first house I ever purchased was a friend of the realtor's son. I went out and made business cards after I owned one home saying that I'm an investor. Because in my mind, I decided I was already going to be a real estate investor. I went and made cards, met a guy that I was working with at the gym. His friend's dad was selling a house. It was 2006. It was a hot market. I bought it $40,000 below appraisal because I opened my mouth and said, hey, here's what I'm doing. I'm going to invest in real estate. I'm looking in this area. So I quickly realized the more people I share with what I'm looking for, and the more specific I can be about where I'm looking, the more conversation I'm going to have about that. I got a call the other day from someone I haven't spoke to in almost 20 years that had been just following what I've been talking about. And he said, hey, we're looking to, his dad was looking to sell their family portfolio. And we haven't had a conversation about it. I haven't talked to the guy in 20 years, but because I've been open about what I'm doing, he reached out and said, hey, are you possibly interested in purchasing this portfolio? It's in a part of town that I'm heavily invested in, and I'm very interested. But if I didn't open my mouth and share what I was looking for, he would never have got a hold of me. And I just can't stress the importance of that part of the relationship. Even people just getting started out. If you don't share what you're doing or what you're looking to do, no one's going to bring you a deal. If someone doesn't know what you're looking for or where you're looking, they're not going to bring you a deal. There's no way. Why would they?
I love it. So for you, when you're you engage with somebody, you make contact, they're interested in selling. At what point, for you to actually, do you just kind of get a sense of what they're doing on the first call, and then you kind of court them where you talk to them 2 or 3 or 4 times? Are you going right in and, let's talk about seller financing right on the first or second call? Kind of walk us through kind of your process of how you engage and take somebody from a brand new, the first time you meet them or talk to them, to the point where you're actually saying, okay, this is what I can do, seller financing, and maybe walk us through that kind of the courtship, if you will.
Yeah, it's a little bit different, with every seller, with every person. But if they've already indicated that they're interested in seller financing, whether it's a listed property where the listing actually says that they're interested in seller financing, or the broker told me that they want to seller finance, or even going back to those early deals on Craigslist where they've actually had it in their ad. These were sellers that didn't want to hire a real estate agent to represent them. They didn't want to put a sign in the yard, so they had put seller financing. I would have a pretty basic conversation with them. And then even if it's a property that wasn't advertising seller financing, I always ask that first. Is the seller interested in seller financing? Because I want to know that. I feel like I can get a lot more creative with the purchase and create terms far greater and better than a bank would give me. And so I just have that conversation initially. If it's a non-listed property, I keep it very informal. So I'm not the guy that puts it on paper and says, "Hey, here's my offer. Take it or leave it." If it's a non-listed property, all negotiations I've ever done have been either verbally or back and forth through email until we've agreed on terms. I have never once had a seller back out just because we didn't put it on paper with signatures. Now, if it's a listed property, I want to take it off the market. I want to get it in contract and take it off the market quick. So I will, if it's on a listed property, try to get a signed purchase agreement. But as you guys know, there's a lot of ways to get out of a signed purchase agreement. But whether it's been a handshake or a verbal or back and forth through email, once we've agreed on terms, once we've agreed on, hey, what works for them, what works for me, I usually shoot an email over to the title company with agreed upon terms. They write everything up for our review and signatures. And like I said, again, I've never had a seller back out just because, it wasn't on a purchase agreement. They want to sell, you want to buy, you've invested that time together, negotiating terms, and it's, they're committed just like I am as the buyer.
Love it.
So you actually just send terms and not even a purchase contract typically, like if it's not a listed deal?
If it's not listed, I never send a purchase agreement.
That's pretty awesome.
And I've never had a seller back out. It just goes back to, again, that true relationship. They've spent time with you. You've talked to them. It becomes so much more, human to human rather than transactional. I mean, you're sitting down with them and it's back and forth. They're not really looking to sell it necessarily to anyone else. If you've come to terms or are really close on terms, they're going to want to negotiate with you. They're not going to go and try to sell it to someone else. And so, it just goes back to that. I know I keep saying it, but the relationship and just being honest, just being straightforward. I've definitely had sellers where the terms are just outrageous and there's no way it's going to work for me. And I'm not going to spend a lot of time trying to pursue that particular deal, but I still keep that relationship open and say, hey, maybe something in the future, because you just never know where it's going to go.
Yeah, I think being transparent. I see so many wholesalers out there now that like they're trying to pull like the pillowcase over the head of the seller, and like they don't want them to know how much they're making on the back end. And I think there's a certain art of just letting them know you're making money but being realistic with them, because so many people just they try to like crush everybody, like every time, get every nickel and dime. And I think long term, I don't believe in that business model at all. I believe in treat everybody. You want it to be a win-win situation. Obviously, as an investor, we're taking risks, and we need to get paid. Can you walk us through like there's a bunch of questions, but why don't we, before we go to any of the questions, walk us through like you're actively doing deals now, even in a competitive market. Can you walk us through a recent deal and like how you found it, how you negotiated it, and the outcome, how much money you put down?
Yeah, absolutely. I'll share my most recent mobile home park purchase. That was a seller financing deal. I've shared this deal on a few podcasts. It's just a great example of the relationship, and then also how you can leverage seller financing to make it really work. So 38 unit mobile home park, about 30 minutes south of me. And I bought this from a guy that I reached out to almost 10 years prior. Now he's a developer. He's a sophisticated investor. He's building some large new A-class type stuff. I think he has several thousand units. I mean, he's doing some big stuff. But I reached out to him years ago simply because I admired his work. So going back to that relationship, I had nothing that I was trying to sell him, nothing I was trying to get from him. I'm just like, who is this guy? This guy's a badass. Like, he's building all these new buildings in town. They're beautiful buildings. What's this guy's story? I reached out because I wanted to know. He was gracious enough to sit down with me and share his story. And we just kept in contact throughout the years. We met up maybe once a year, if even that, but we just kind of stayed in contact. with what each other were doing. And he messaged me out of the blue saying that his friend was selling a single family home the next town over. And I said, hey, I'm really not looking for single family right now. I'm focused on value add multifamily and more specifically mobile home parks. And he said, hey, I have a mobile home park that I'd be interested in selling you. And I said, would you sell or finance it? And he said, absolutely. And so we talked about terms. I went into his office and literally on a piece of paper wrote down, the price, the down payment, the interest rate. And with this, we had that relationship because I called him out of the blue 10 years before, but we had built that rapport. He wrote down $70,000 down. This was on a $720,000 purchase. And I said, hey, I'd like to keep a little more of that down payment because I'd like to put it back into the park and into future deals. He crossed out that 70K and wrote 30, and so that was like a 30-second negotiation right there. But the reason he was willing to do that is because
you're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
We knew each other. He didn't need a large down payment. The guy is very successful doing his own thing. There was still a lot of value add opportunity with the park because that's not where his time, energy, and focus was. And then when we closed, the prorations, the deposits, and the prorated rents that went towards closing brought it down to $15,000. So I came into that deal with 2% down. I'm making that money back in the first 6 months. So it's a 200% cash on cash return. And I don't share that to brag. I share this story because it's the power of I bought from a sophisticated investor. I mean, he's doing some high-end, amazing things, but there's still value add opportunity. And he's still willing to structure it in terms that work. Ultimately, he wants to see me succeed. He didn't need that large down payment. And it's that true win-win. And so, it ended up coming to 2% down. The value add was the rents had not been increased for, 4.5, 5 years. The utilities weren't being billed back. Some of the pads were covered. There were 3 pads that were just covered in leaves, right? It cost $600 to get that cleaned up. And now all of a sudden there's 3 more pads that rent for $450 a month. So there was that value add opportunity. There were some stick built structures that just had some deferred maintenance. And again, so it's a great return. He was happy to get it off his plate, and I was happy to put my time and energy into improving the park.
Brilliant. Love it. Absolutely love it. Love it. Love it. So let's talk about, I'm hearing another theme. The theme is really about networking.
Absolutely.
You're building relationships. So are there any specific strategies and I love the fact there was somebody you identified as somebody as influential, a mover, a shaker, somebody you admire, and you wanted nothing from him other than just to connect and, basically connect with. So maybe walk us through strategically, if there is strategically, tactically, how are you connecting with people? How are you networking, and kind of what are your mindset there? And then even specifics, what are you doing there?
Sure. So initially, I wasn't doing anything on social at all. So the last year and a half or so, I've been pretty active on social, and a lot of that is just to give back because I feel like it's a great platform to give back. But I was off social for maybe 3 years or so. But prior to that, it was just literally reaching out. Like early on, it was just every agent, every for sale sign in the yard, just making a call, going to open houses. I mean, I haven't been to an open house for years, but initially I would go just to meet the agent and get my name out there and have that introduction. A story that I share all the time, and I always remind there's a local hard money lender. I walked into her office years before I ever borrowed hard money. I didn't borrow hard money for about a decade after I started investing in real estate. I walked in there and probably looked absolutely crazy. I walked in and said, "Hey, my name's Gabe Hamill, and we need to meet. And I'm sure one day we'll do business together." I think I only owned a couple houses at the time, and I'm sure she thought I was crazy. But we kept in contact. And eventually when it came time to borrow money, I wasn't just some guy off the street. Now we had built the relationship. Now I had a track record. She had seen what I'd been doing. And so we had built that relationship. We knew who each other were. And then, another example is the first time I ever paid a seller financing deal off. So I bought all these seller financing deals in 2009, 10, 11, 12, 13. Well, in 2014, interest rates dropped to 4% for the first time. The market was back up. So my properties the rents were improved. The market was on my side. Interest rates were low. So I went to refinance a bunch of my properties. Well, one of my sellers, when I paid her off, she said, "Hey, what am I going to do with all this money?" And I said, "Hey, you can lend it back to me." And she kind of thought I was joking. She laughed. But a couple months later, she called back and said, "Hey, were you serious about that?" And I said, "Yeah, absolutely." And then she financed my next deal. And so just because you pay a seller off or just because you do one transaction with a seller doesn't mean that relationship ends. And so she did finance my next deal because the same thing, right? She wanted cash flow. She didn't want to actively go invest. She didn't, and so it was a true win-win. Another great example, I was competing on a bunch of bank-owned properties, and I kept outbidding this other local investor. And she said, "Hey, on the next deal, if you outbid me, if you get the property, can I finance your deal?" Well, I had met her years before because she was selling houses with seller financing. Her terms didn't work for me. I could have just blown her off and like, "Gosh, her terms are crazy. They don't work for me." But she was an investor. I was an investor. I could have looked at her as competition, but we just kept that relationship open. We would have conversations. We'd check in with each other from time to time. And then when we competed on deals, we didn't ignore each other. We didn't look at each other necessarily as competition. She said, "Hey, if you get this deal, can I finance this deal for you?" And that just led to, an opportunity for her and myself. You just never know. I don't close doors.
I love it. Absolutely love it.
So here's my question. I think Gabe was a state champion wrestler. So I want to kind of dive into mindset because, to be a high level competitor, right? I mean, I'm sure that kind of mindset, the transition into real estate investing, taking that work ethic. I mean, to be a wrestler, to be able to shred weight, to drop weight, the regimen, right? I mean, did that really, do you think, really help you in the real estate investing world because you were used to the programming and the adaption and having to really kind of focus? And is that what you think kind of really kind of propelled your business?
Oh, 100%. I mean, my, high school wrestling was very impactful for my life. So, I didn't start wrestling until I was a freshman in high school. So I was out there getting my ass kicked on the mat. But I also saw, hey, here's a sport where you have no one to blame. It's you and somebody else, and you put that work in. And so, yeah, I had big goals and I worked my ass off for that state championship, but it started in the mind, and I think even earlier than that, I was fortunate enough to have a mom that, all the time told me you can do anything you put your mind to. And I think a lot of people hear that, but as a young kid, I just truly believed it. I was like, yeah, I can do anything I put my mind to. So when I won that state championship in wrestling, a year before that, I knew it. I knew that I was going to win the state championship that following year. But then I put all that work in to get there. So it wasn't just oh, I'm going to do it. And, the law of attraction, sure, I think that's a real thing. But there's also the law of action, of actually putting in the work to get there. And so I took on real estate investing the exact same way that I took on wrestling. And the same way I took on the state championship was I believed in my mind first that I was going to do it. I believed in my mind that I would be financially free through real estate. I believed that I'd build a real estate portfolio. And I took it on exactly that same way. So yeah, I appreciate you, connecting those dots for sure.
Well, yeah, I mean, I've been around this kind of, I guess, the real estate investor circuit for a long time, go to a lot of meetups, talk to a lot of people. I'm a lender, so I'm always kind of figuring out what's working, what's not. And really kind of the real factor is really the mindset and taking action. I don't think anything is super complicated. I mean, sure, analyzing a 500 unit multifamily property is a little bit trickier than, a single family property and so forth. You got to get certain skill sets, but it's really comes down to having the ability to communicate with people and taking extreme action and being very confident. I think that's really where your success really kind of dialed itself in. And I think people out there that are like, you know, if you could give any advice to somebody that's listening, that's probably listens to all of our episodes and enjoys the content, because we do bring in great guests and they have great content. I mean, that person that's like just, you know, wasn't a state champion wrestler, right? Like, what can they do? What's your advice for them to get the state champion mindset? You know, and you had to develop it, but how could somebody that hasn't been a winner win?
Yeah, I mean, I think you nailed it with the taking action, and I say that all the time because you can overanalyze any deal. I mean, you can find a reason not to purchase any deal. I mean, you can always poke holes in any deal. None of them are perfect, and so I guess my advice and going along with the taking action is, if you want it bad enough, you will find a way, you know. But if you don't want it bad enough, it's easy to say, no, it's not going to work. No, it's not going to work, and find an excuse not to do it. But to me, you know, having a job, you know, you hate, or working for someone else that you don't like working for, to me, that's not the life that I would want. So I think having that strong desire of, why do you want this? Why is financial freedom? Why is time freedom? Why is it that you want that? And then, do you want it bad enough to actually do something different than you're doing now to change that? If you don't want it bad enough, you're probably not going to get it.
And talking about kind of structure of your business now, do you manage your properties? You manage all your doors? Is that all outsourced? And then from there, what does your day look like on a typical day? Work out in the morning, you know, like how do you plan your days?
Yeah, so you know, I don't manage my properties. Early on, I did, but I always planned on turning them over to property management. I at one point thought, do I open up a property management company as I started scaling? But I realized, like, for me, it wasn't about just the money. Early on, I thought, oh, I want to be rich. I want to be financially free. But then I realized it was the time. Time is what I wanted. I wanted to be able to do what I wanted to do, when I wanted to do it, how I wanted to do it. And so I've structured everything on that. So I always think, how does this affect my time? So as far as property management, I hire third property management, because I know that running the property management company is going to take a lot of my time away from the other things that are important to me, my family, my health, being able to travel, things like that. And so, you know, even when I'm taking on a deal, or when I've looked to scale, it's also why I've chose not to syndicate, because I know that's creating a job for myself. You know, my day to day is you know, very different, but it's however I plan it. You know, so. A lot of times it's hanging out with the kids. You know, we went out of town. We're about to head out of town to go camping here in a little bit. But that's important to me, to be able to have time with my family, be able to jump on, you know, calls like this. And so I really consider with every decision, not just business wise, but how will this affect my time? And I'm very careful with what I do and how that will affect my time on a daily basis.
That's great. Yeah.
Very strong. How are we doing on Beau? How are we doing on questions from
Oh yeah, we got a couple questions. I just want to dive into real quick on kind of a technical basis. Are most of your transactions seller financed, but do you ever do sub twos, subject twos, or you just kind of stick with the seller finance model? I mean, what's been kind of like your bread and butter?
Yeah, the majority of the stuff that I purchased has been properties that are free and clear, and so it's recorded note trust deed. The seller puts a first position lien on the property, so pretty straightforward. But I've done some subject to. I've done some land sale contract. I'm not going to not do a deal just because you know, it's free and clear or not. It just depends on the property. So I am totally open to and have done subject to and land sale contract. It just depends on the property. It depends on the seller too.
Cheryl asks, do you propose seller financing to properties listed on the MLS? How do you deal with the realtors? I know you talked about it a little bit, but maybe kind of reemphasize that. Yeah,
it's tricky because, for one, I mean, most real estate agents aren't investors, right? That in of itself is tough. Most agents don't look at real estate through an investor's mindset. So I can't tell you how many agents will send me stuff going, oh my gosh, this is a great investment. I'm like, no, this is a cute house in a great neighborhood, but not a great investment. And it's the same with the commercial and multifamily space. So that's tricky in and of itself. And then on top of that, most agents don't know what seller financing is. And so, finding an agent that you work with to explain that to a listing agent who then explains it to their seller can be tricky. I have had some success with that because I've had agents that really understand my model and is able to have that conversation either with the agent or with the seller directly. But in most cases, I still prefer to get direct with the seller if at all possible.
Okay, great. Thank you. Crystal asks, how did you start? Did you do Craigslist ads, work with brokers? Okay. Crystal, I can answer that for you. He already went over that. But he did start just making calls on Craigslist, and then he would searching Craigslist for seller financing in the search tool, and then he would call them and just start talking to people, right?
Yep.
And then he'd pencil out the deal, based on the terms that the seller wanted. How much would this cash flow? Is there any equity left in the deal? And just like a normal kind of analysis of a deal, but he would just basically start there, and he still to this day does not do any paid marketing. Okay. Jerry asks, hi, can you get sellers to go in second position so you can get a first position loan from a private money lender or a bank?
Yeah, that's actually an interesting question because most sellers do take a first position lien, but I've had sellers, depending on what I'm doing at the time, I've had multiple sellers willing to actually take the lien off the property and uncollateralize the loan, whether it's for a refinance purposes or I just want it unattached because I want to do something else with the property, get bank loans. So I have had sellers willing to completely take the loan off the property and turn it into an uncollateralized business style loan, essentially allowing that property to be free and clear on paper. And again, that goes back to the relationship. They have to know and trust you to be able to do that because ultimately there's nothing collateralizing that money.
Great. John asks, when you're speaking to sellers regarding seller finance, aka an installment sale, like for the benefit to them, right? If they sell on an installment sale, I know there's some kind of IRS code. We're not CPAs or anything, but they can actually pull that installment IRS code and see that I believe they're only taxed on what's been paid that year on a yearly basis, right? That would be the only thing, the taxable equation for them. So instead of them paying their gains, on the whole big chunk, they just might be paying on that, $10,000 of principal and interest payment, right? Is that kind of
Yeah, correct. And essentially it's amortized out over the course of that loan. One thing we didn't touch on, a lot of times I do interest only loans. And so then they would be taxed on the interest essentially. But the reason that I do, and I know it's kind of going off a subject from that question, but a lot of times I'll do interest only loans, especially if it's a shorter loan. You don't pay a lot towards the principal anyway. And so, especially those first couple of years. And so the advantage to the seller is if when you do pay them off, say you do a 10-year, a balloon in 10 years, I'd rather have it be interest only for that 10 years because it's going to increase my cash flow. But the sellers like it because they're going to be earning interest during that time period and they're going to get the principal balance back. So that's again a win-win. I want more cash flow. Their principal balance doesn't get paid down. Win-win.
And also, I imagine if you were able to negotiate a longer-term loan, right? Like let's say you did a 15-year loan, and on year 6, sometimes they come back to you, and you might not be able to pay them off, but you can then propose, well, what if I paid you? I could pay you back if I pay you back X amount, right? You could kind of give them that option at that time because if somebody died, one of the wife died or the husband died, maybe they'd say, okay, we don't want the payments. We just want the lump sum. So there's those options when it's seller finance to either renegotiate the term or actually give them a cash value for the existing outstanding balance.
Yeah, absolutely. I mean, you can negotiate anything. I mean, up front, but then also once you're in the deal, absolutely. You could refi it with that seller. You can lower interest rate. You could, if maybe they'll extend it, but they want you to increase the interest rate a little bit. So it just depends. But just because you close on the deal doesn't mean you can't negotiate the terms within the deal once it's closed. You might get to where a seller they thought they wanted to be paid off in 5 years and it starts to get close to that 5-year mark and they realize, no, I'd rather just have that income coming in, I don't want to be paid off. And so you can absolutely negotiate that. I've had sellers, lower their interest rate because I was going to pay them off, and they said, hey, rather than paying me off, can we just lower this and we keep the loan going? Other sellers have said, hey, if you can't pay me off, I'm going to have to I'll extend you, but I'm going to have to increase the interest rate. And then it's just a numbers thing. Do I want to refi with the bank, or do I want to keep that financing with them? And so completely negotiable.
And Ty, this is for you. What takeaways did you get, because Ty is a real estate broker and also an investor? Just curious, like in your mind, listening to today's conversation, how are you going to go apply seller finance? I know you're doing a couple right now, but what's your kind of mindset and take on this? Because this has kind of got me really excited, where it's like I'm missing so many opportunities out there. So I'm just curious on your kind of viewpoint here, Ty.
My takeaways are really very, very clear. I mean, I just love the whole idea of networking, and the whole idea that he doesn't do any marketing. I mean, it's all stuff that it's all word of mouth, and it's all network, and it's all sphere of influence and people that he's connected to. And I just look at, in that category, I think we could all, I know for sure I could do a much better job of, we're always doing, in my world, most of my network, or when I look at the agents and other investors, we're all so busy doing a lot of tech and a lot of proactive marketing that, I think it's definitely a more focus, in your own personal network. I also love something that you said, Gabriel, that I think it could have gotten overlooked, but really understanding the seller's point of view. We all know that, what's important to them. It's something I preach, in the different masterminds and skill sets and things with people, accountability groups. But I think you said something that was really profound that hopefully the listeners really got, was that, for sellers, it's even beyond what's most important to them. They usually have one sticking point, and it could be the price, it could be the monthly payment, it could be the interest rate, it could be the down payment. And you talked about that. And if you can really address that main one that's important to them, then the idea is that you really have a lot of opportunity to kind of now, it's give and take, right? Okay, we can give you your price, but here's what I can do on the down payment. So I think it gives you some negotiating leverage. And I think that was huge. And you said that so quickly out of the gate, in the first 10 minutes, I think you said that first 10 or 15 minutes of the interview. Really, really brilliant. Very brilliant. I love that.
Yeah, no, I appreciate that. And it's just true. The sellers, I'd rather get great terms than necessarily a great price, and I've had sellers where it's, for whatever reason, they're just really stuck on that price. They have that price in mind. So it's fine. I'll give them that price, but can we lower the down payment or lower the interest rate? I've had other sellers where they are just dead set on interest rate. That's the return they want. And I've had sellers give me huge price discounts or lower the down payment significantly because they're so set on that interest rate. So it's, yes, I'll give them what they want, but we tweak everything else. And that's really the advantage with seller financing, is when you go to the bank, they're pretty much telling you, hey, here's the terms. This is the down payment. This is the interest rate. This is the loan terms, and you have to qualify. But with seller financing, you have that flexibility to be as creative as you and the seller are willing to get. And that really is the biggest advantage of seller financing, in my opinion, is that it's flexible. It's flexible. It's whatever you and the seller can come to terms on. You can do interest only. You can do direct principal. Anything that you can start payments months after you close. I've had sellers allow me to not make payments for the first 4 months because there needs to be some time or money put into the property. And so it's just most banks aren't going to allow that. It's just as creative as you can get and as creative as the seller can get, it can be done.
Gabriel, what are you, with regard to playing with the numbers and terms? And I think this is important, for people that, in this game and the way that what we're talking about specifically on the structure of the deal, it's so critical that, again, you can give up on price or give up on interest rate as long as you know how to structure the other components to your favor so that you have cash flow. Are you using a spreadsheet? Are you using are you using a HP 12C, financial calculator, or just kind of give us some tech, a little bit of tech on how you're actually going to underwrite the deal specifically?
Yeah.
When you give the price or you're giving up the rate, How are you back ending? How are you analyzing this and making sure that you're getting your cash flow to make it really work?
Yeah, it's great. I have a pretty basic Excel sheet that I just added to throughout the years. Initially I didn't have any of that, and it was just, hey, I'm putting no money in. If it cash flows, it's an infinite return. I didn't know, a lot about cap rates and cash on cash return and different things. So early on when I was analyzing properties, it was, hey, if I'm going in with no money and this thing cash flows and I'm getting, if I put a down payment, if I'm making that much back, during the term length, then I'm doing good. My risk is minimal. Any no money down deal, that's going to be an infinite return if there's cash flow. Now, moving on to bigger deals or properties that I put money into, I'm looking heavily at what's my cash on cash return. If I'm putting money into a deal, I want to know, how quick am I getting that cash back? What's my return on my money? And so, the Excel sheet that I've kind of created and added to throughout the years, it shows cap rates, it shows, purchase price, the interest rate. You can start tweaking those things, whether it's interest only payment or direct principal or fully amortized. And I just start tweaking those things to get a cash on cash return I'm happy with. And every property is different. I don't have an exact, I need this property to kind of fit this box, or I need, X amount of dollars per door. I just take more of a holistic approach of what is it that I want this property to do for me? And can I create terms that work? And I just start tweaking the terms within my Excel program to make it work. And sometimes the properties do, and sometimes they don't. One thing I would say too is I typically do almost everything I buy has some value add opportunity, right? They're poorly managed, they're under rented, there's some deferred maintenance, but I never rely on that. I always look at what is the property currently doing. So when I plug my numbers in, I'm always going off of actuals and the most recent couple of years. I always base my terms on the actuals, even if there's that upside. And sometimes there's huge upside. I mean, I've purchased properties where the rents were half of what the market rent was, or way below market rent. I'm still basing my numbers on the actuals because I know that's what the property is doing. I know that's what that's producing. So I usually put together a very conservative actual, if I bump rents or kind of do these value add things, how the property will perform. And then I put if the property performs at where I think it can and should, what does that look like? But I still base it off the actuals. Usually it gets to, hey, here's where it should be, because I know my market and I know where the numbers should be, but I still never based on that. And I just do that to kind of keep myself in check and to hedge my own risk.
Smart, really sharp.
Yeah, we got a couple more questions, but we're actually rounding out to the hour, so we'll have to do another call with Gabe in a few weeks or a month or two, and dive deeper into this, because we could probably talk all day. Gabe, where's like the best place for people to find you if they want to follow you and get to know you a little bit more? I know you're posting a lot on Instagram. Is that where they want you to go?
Yeah, that's where I'm most active. You can find me at Gabriel R. Hamill, or if you just look up Gabriel Hamill, you'll find me on Instagram. I'm also on Facebook, and then my website is hamillinvestments.com. And there's a bunch of links on there to some different podcasts and stuff I've been on, and some good information.
And what's kind of your 5-year plan here? I mean, what's next for you in the next 5 years of your life?
Yeah, I'm really looking, real estate specifically. I'm looking to, double my unit count over the next about year and a half or so. I've been very focused in Oregon. I've mostly not partnered with anybody, but I am looking for some strategic partnerships. Someone that brings a different skill set, but kind of on that same trajectory. So, moving forward, I want to move into some larger deals, and I think some direct partnerships makes sense for that, and possibly moving out of state. I'm looking at some other markets. On the personal side, the family and I were looking to be very mobile. We really want to be able to travel, and everything with COVID has created some opportunities, but also has made things difficult. We're supposed to take off to Thailand in a few weeks, and right now they're not letting anybody in. So again, kind of going back to that time freedom thing, is we want to be able to travel as a family and really be able to do this anywhere in the world and just take advantage of all the amazing things that this world has to offer.
Love it.
Ty, any kind of closing remarks? Any last questions for Gabe?
No, Gabe, I appreciate it, man. I really learned a lot. I got a nice page of notes here, and I just think you had some very clear distinctions. I love, again, kind of summarizing a little bit, but the way that, it's all network based, it's all relationship based. The fact that you get to know people, and because they get to know you, that creates, a bond where now you don't have to bring as large of a down payment, or even, no down payment based on, what their needs are. And I just, even the fact that what you talked about, the price, the terms, the interest rate, the payment, all of those things, and really being focused in on the exchange and negotiation, huge distinctions. I thought this was really, really brilliant. Sometimes when we come to these, when we come to the interviews, or just in general, when I'm watching some of these, it's like, oh, this is kind of more of the same. I'm familiar. I know that already. But you had some very clear distinctions. I also love how you're like hyper local. And I think there's some power into that. And I feel like even myself, I get a little spread too thin. And I love that, again, how you're hyper local. So I think that was in itself, we didn't talk about it, but I think it's important to note to the viewers or the listeners, there's a lot of power in how you're hyper local, and,
absolutely.
So, very strong, man. Great job. And thank you for being on with us.
No, I appreciate you guys having me on. Absolutely. And, I'd love to come back on or do some Q&A if that would be helpful.
Yeah, no, we're actually, when COVID's kind of in the clear, we're creating a mastermind group where it's actually going to be free for anybody that wants to come. It's going to be in Las Vegas. And it's going to be, we have like amazing groups. So maybe if you're around, who knows when it's going to be, but we'd love to have you with this super mastermind. And if we don't do that, I also was just thinking, wouldn't it be great to do a day-long like creative financing summit, and get like some of our friends and Gabe there, just to like kind of hash through like a day worth of just down and dirty like subject
awesome.
investing. Yeah, so that'd be, with your skill sets and your energy. I mean, it's great. We have a lot of questions, a lot of good feedback, and I know personally I've gotten tremendous value. So thank you very much, guys. I'm going to take us out with our closing banner, and
Awesome.
appreciate
Thank
you
you
all.
guys.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.